Good morning. My name is Miguel Gonzalez, and I'm a retirement specialist with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about retirement planning. When saving for retirement, it often makes sense to contribute to your employer-sponsored retirement plans to take advantage of any available employer match opportunities. However, not everyone has access to an employer-sponsored plan. Even if you do, there are reasons you may want to consider using traditional and/or Roth IRAs to supplement your retirement savings. There are important differences between the two types of accounts. Understanding the potential benefits and drawbacks of each type of IRA can help you make more informed decisions. Let's talk about potential benefits and considerations. Regardless of which type of IRA you choose, the contribution limits are the same, although Roth IRA contributions are subject to income limits. Traditional IRA contributions are not limited by income levels unless you or a spouse was covered by an employer-sponsored plan during the year of the contribution. In 2021, the total amount you can contribute to your traditional and Roth IRA accounts is the lesser of your taxable compensation for the year, or $6,000, $7,000 for those age 50 and older. However, there are important differences in tax treatment for these accounts. If your income is below a certain threshold, you may be able to deduct some or all of your contributions to traditional IRAs, therefore reducing your taxable income in the year of the contributions. Taxes on contributions and any growth are deferred until you begin withdrawing them. So if your tax bracket in retirement is lower than in your earning years, you may pay less in taxes on your retirement dollars. In contrast, you cannot deduct contributions to a Roth IRA. Those are after-tax contributions. However, qualified distributions from Roth IRAs are not subject to federal income taxes, potentially lowering your tax burden in your retirement years. Generally speaking, Roth IRAs may make sense for investors who expect to be in a higher tax bracket in their retirement years than in their working years. And unlike traditional IRAs, Roth IRAs are not subject to the IRS minimum required distribution rules, giving account owners more control over deciding when to access and use their retirement accounts. Roth IRA conversions, let's talk about this. If the idea of using a Roth IRA to supplement your retirement savings appeals to you, but you do not meet the income limits to contribute to one, you may want to consider making a non-deductible contribution to a traditional IRA and then converting the account to a Roth IRA. There are no income limits for Roth IRA conversions. A Roth conversion changes an existing IRA or 401k into a Roth IRA, converting the assets so they will grow on a tax-free basis rather than a tax-deferred one. However, the catch is that you must pay income taxes on any previously untaxed converted amount in the year of the conversion. There are also rules specifying that you must leave the converted dollars in the Roth IRA account for at least 5 years before withdrawing them. Withdrawing them before the 5 years are up to you, but may be subject to a 10% penalty on the withdrawn amount. I always advise clients seek guidance and weigh your options carefully, of course. Ultimately, there is no bright line test to determine whether a traditional or a Roth IRA is best. The answer depends on your current situation and anticipated circumstances in your retirement years. If your income has dropped, so you're in a lower tax bracket in 2020 than in previous years, it may make sense to consider a Roth contribution or conversion. Or if you are concerned about your tax obligations for 2020, you may be able to make a deductible contribution to a traditional IRA by April 15, 2021. Talk to your financial professional to learn more about different types of retirement planning vehicles and to explore whether a Roth IRA may make sense for you. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.